Let's dive into a real head-scratcher from the housing market of late 2025 and early 2026. On the one hand, things look incredibly tough for house flippers, but on the other, there's this wave of unbelievable optimism. So how can both of those things possibly be true at the exact same time? So, yeah, that's the big question, right? The very people whose job is to buy, fix up, and sell homes are feeling better than they have in years, all while their actual business is hitting rock bottom. It just doesn't seem to add up. So let's unpack this. And this slide right here, it really lays out the paradox perfectly. You've got investor sentiment taking its biggest leap in 3 years. I mean, it's soaring. And at the same time, actual market activity has just plummeted to a 10-year low. So what's really going on here? Okay, so let's start with the sunny side of the street. What's actually feeding all this optimism? Why are these investors looking at a market that looks pretty bleak on paper and seeing a golden opportunity? Well, it really boils down to 3 big things. First, investors are finally seeing mortgage rates start to come down. Second, it's getting a little bit easier to get the loans they need to fund their projects. And third, and this is a big one, home prices seem to be hitting a floor instead of just falling and falling. For an investor, that combination is like seeing the sun come out after a long storm. And wow, is that signal creating some confidence? A staggering 71% of flippers are now saying they expect to buy more homes in 2026. That's the highest number ever recorded in the 4-year history of this survey. They're not just crossing their fingers, they're getting their checkbooks ready. And it's not just about buying. Their outlook on selling is just as rosy. 42% of flippers are expecting good sales conditions over the next 6 months. Now, to give you some context, we haven't seen that level of positive thinking since way back in early 2022. And you gotta remember, that was a much, much hotter market. But what really gets me here is the sheer gap between the optimists and the pessimists. You've got 42% expecting good times, while only a tiny 9% are anticipating poor sales. That's the lowest level of pessimism we've seen in 2 years. And this isn't some weird regional thing either. This positive vibe is consistent all across the country. All right, so that's the good news. That's the feeling on the ground. But feelings are one thing. Actual sales? Well, that's a whole different story. Let's pivot and look at the hard data, because it paints a very, very different picture of what's happening right now. And here it is, the reality check. In the last part of 2025, flippers sold just 37,000 homes. Now, that's not just a drop of over 9% from the year before. We're talking the lowest number of sales since way back in 2015, a full decade low. Ouch. And get this, even when they do manage to sell a house, it's often a real battle. More than 40% of flippers had to cut their asking price or offer up other concessions just to get the deal done. That tells you one thing loud and clear. Profit margins are getting squeezed super, super tight. And if you want a number that just screams market pressure, here it is. A record low 14% of flippers actually sold their homes for more than what they were originally hoping for. Think about that. That means almost everyone else is either just barely hitting their target or, more likely, selling for less. Okay, so we have this massive optimism on one side and these absolutely brutal market numbers on the other. How do we make sense of this? Well, the answer, it's all in the flippers' new playbook. It's not about the market they're in right now, it's about the deals they're choosing to make. But before we can get into their new playbook, we have to talk about one key idea: after repair value, or ARV. This is the number a flipper lives and dies by. It's their best guess of what a house will be worth after all the new floors are in and the kitchen is sparkling. Their entire business model is built around this number. So here's what's happening. On average, investors are paying a little bit less for houses than they were a year ago, down to about 66% of that future value. Now, at first glance, a 1% drop doesn't sound like a big deal, right? But it's a sign of a much, much bigger shift in their thinking. And this, right here, this is the secret sauce. This is why they're so optimistic. A year ago, about 36% of flippers were hunting for those really great deals, paying 60% of the ARV or even less. Today, that number has shot up to 42%. So they're not just buying any old property. They're getting way more disciplined. They're only going after the absolute best deals, the ones with a huge built-in safety net. All right, let's put all the pieces of the puzzle together now. We've got the optimism, we've got the tough reality, and we've got this new, smarter strategy. What does it all mean for the housing market going forward? So it turns out both things can be true at once. The paradox isn't really a paradox after all. The optimism is totally real. Investors see the early signs of a recovery and they're getting excited. But the challenges are just as real, and it's forcing them to get smarter. Their strategy isn't about ignoring the bad news, it's about preparing for the good news. They're buying smarter today because they believe a better market is just around the corner. Which, of course, leaves us with the big multi-million-dollar question. This new playbook, it takes a ton of discipline and patience. It's one thing to feel hopeful when you're making plans, but it's another thing entirely when you're facing a tough market day in and day out. So, can this smart, strategic hope really survive the reality that's still to come? Honestly, that's what we're all waiting to find out.